Right. Next up, we are going to, what is it that I owe you? Your notepad. There you go. Ladies and gentlemen, we are going to hear now from the big boys in Treasury, that is the Reserve Bank, as they talk to us about how central banks think about innovation and how rate reforms, which are central essentially to your functioning as corporate treasurers, are going to affect and impact corporate treasurers. We'll be hearing from Ruwan Ru, who is Head of Enterprise Information Management at the SARB, as well as Zakele Gininda, who is Senior Financial Markets Specialist at the Reserve Bank. If you thought API and blockchain scares you in your corporate, imagine what it does for the keepers of the whole country's purse strings. Gentlemen, over to you.
Good afternoon, everyone. If you can hear me. Tough call, eh? That was a tough call. Yeah. So thank you very much, everyone, for the opportunity to come and present to you today some innovations that's happening within the financial market space. So I don't think the SARB can claim all the glory for this. It is happening within the financial markets industry. Maybe I should start off with a bit of a disclaimer from your question. Neither Zakele nor myself sit on the MPC. We do not have any influence over the MPC.
75 basis points, how dare you.
If you do have any questions on the repo rate, please direct your questions to the website. I'm sure they'll get addressed there. But I will speak to you today about reference rates and the innovations that are happening in the reference rate space. So let me kick it off. I would like to learn three things with you today. One is, how do central banks and regulators think about innovation? What does it mean to us? How does the SARB think about and approach innovation in the market? The second thing, let's do a bit of a deep dive into very specific innovations around reference rate reforms and what it brings to transparency and financial stability for the market, and specifically the reference rate that's now being published for market observation. And then close off with the implications and applications to the market. We will, on the Zaronia rate, do a bit of a deep dive to see how that behavior was observed over the last couple of days. So let me kick it off. So there are a couple of themes within the regulatory space. Typically, there's a push and a pull from market innovation. So I would guess a push is around, if there's new innovations in the market from different entrants, new technologies, new processes, whether it's blockchain, DLT, or whatever it may be, one of the questions that regulators need to ask themselves is to how quickly they respond to it. So do they have to respond? What do they need to consider in terms of innovation for market conduct or market operations, regulations, supervision, and policy? And that's been a very active space for them. Then there's also a push where regulators are also saying, well, what market innovations, what technology innovations make sense for central banks, and to regulators to start employing into their process around policy development, regulation, and supervision. A good example would be cryptocurrency and the work that we've been doing on central bank digital currency. And then if you look at a lot of the regulators out there, regulators and central banks being custodians of large volumes of data, our interest has really been in advanced analytics, machine learning, alternative data sets, big data, and the like. Central banks are typically organizations that use traditional analytics, backward-looking data, making projections in the future. I think innovations in the technology space has really pushed it forward for central banks to say, how do we bring in these alternative analytical methods, big data, analytics, machine learning, into the analytics space of central banks for policy, regulation, and the like. you will see from the example in the slide deck, I'm not going to go through the details, largely central banks and regulators have different reasons why they do it. Some would say we need to understand our traditional very strong capability around analytics, market analysis and policy direction, augment that with newer forms of analytics. Some is very keen to go very alternative and be completely transparent about data, and some look at big data, microdata, and real-time data in terms of real-time analytics for the market. There we go. So let's dive into a couple of very specific examples of areas of innovations, and I'm just going to touch on a few. So if I look at market surveillance, if you look at the SupTech applications that are available, I'm sure I should not be close to that mic. If you look at the SupTech applications and the large amount of data that is being produced by that, it's really an opportunity for central banks to really look at analyzing the market and looking for what we would call suspicious market activity or suspicious trading, whether that being in front-running, mis-selling, and the like. You can also go into very specific examples around, say, misconduct analysis, where machine learning, artificial intelligence provides a platform where you can start looking at suspicious activity, so whether that being anti-money laundering or terrorist finance and the like. I can dive into financial stability support maybe, or macro-prudential supervision, where these very large data sets and the technologies that goes with it and the technologies available helps us understand for emerging risks within the market. We could use things like, and we do experiment with that, around natural language processing capability, where we start analyzing sentiment analysis. And an exciting field for us as well is around using these technologies or analytical capabilities to look at feed-through mechanism in the market. So feed-through mechanism, again, is around that famous repo rate that's going up. What is the feed-through mechanism and the time of the feed-through of the repo rate into the market? But I do want to touch specifically on one innovation which relates to financial stability and supports that in terms of enhancing transparency in the market, and that's around reference rate reforms. I'm not going to go into much detail around that. Most of you would have had the background in terms of what's happening in the reference rate reform world. It all started off with the LIBOR scandal a couple of years ago in the UK, where it was seen that these IBORs, or interbank overnight rates from the banks and the banking sector, is susceptible to manipulation. And there were questions as to whether it's still representative of the trading activities against it. A number of jurisdictions has then kicked off a process, and there was a need to start looking at reforming these reference rates to an alternative rates. And a lot of jurisdictions, including South Africa, has embarked on that to start developing alternative reference rates, developing the work around that, and coming up with an alternative rate. We started off that process by looking at our own reference rate or interbank rate at the moment, the JIBAR rate, which everyone's familiar with, to understand how we can strengthen that. And then we had a number of committees that form and working groups within the financial industry where we looked at overnight reference rates as well as term rates and the development around that, or near risk-free rates. A couple of working groups around that started formulating how the alternative calculation methodologies could look like and how that would look like in the market. And I will touch base on where we are in the process currently. So that led to a number of knock-on effects. So once you decide within the industry that you're going to transform reference rate, where you move it basically from a contribution rate methodology to a methodology that's underpinned by actual transactions, and you enhance transparency through publication of primary and secondary market activity. How do you move that across? The market has to transition to that new rate. There are legal implications to it. There are tax implications potentially to the rate. And there's infrastructure impact and requirements when you want to transition from, say, the old JIBAR rate to the new reference rate. So where are we tracking with the financial industry on benchmark determination? I would say we're sort of there at the green level. So it started off by strengthening the current JIBAR process, where we've increased the commitments from the contributing banks in terms of their rate commitments, and then we enhance the transparency of the JIBAR trading through publishing primary and secondary market activity. That has been in the market since October of last year, if my memory serves me correctly, and that's ongoing. Parallel to that, the number of work streams has now started working at what are the alternative calculation methodologies, what is the process we want to follow to move from a contribution-based rate to a rate that's underpinned by a methodology and physical transactions. Number of publications and papers in the market, and work has been done with the different committees. Where we are now is that we've implemented what we would call that market infrastructure to actually collect the data, do the calculation, and actually publish that new rate. Parallel to that, a number of working groups in the industry are now looking at the next steps. I think the three most important ones right now is that transition workstream that needs to understand is that once we've adopted, and I mean everyone in the market adopts and the new overnight reference rate, how would the market transition from the one rate to the other? What's the repercussions of that? So quite a piece of work around the transition. There are practical and technical implications as well for rates. Obviously, the technologies that you use need to be able to accept those rates, calculate them, do the right back office, do the right accounting attached to it, pricing, valuation. So there is a piece of work around understanding data collection and infrastructure, and that work is now moving over to the infrastructure transition within the financial markets. There are tax and legal implications to consider in terms of contracts, and obviously there needs to be communication around it, and what's the governance process. I think, let me stop there. Yeah. So what I can mention is that the new overnight rate has been published for the last 2 months. It's available on the SARB website, and the current process is where we would be looking with the industry of observing the behavior of that rate to understand how it behaves against the current JIBAR rate. Give it about a year plus, or around about a year, to observe the rate and understand the impact of that, and then make the final decision around it as to when the market would be ready to move over to a new overnight reference rate. Excellent. I will not delve into the technology process, but attached to this, there is a process that we follow, and where we were talking about APIs just now, so there's an example of an API. So what's different in this process? We are collecting granular data, transactional data from the contributing banks in the industry. There's a validation process attached to it. We do the calculation and we publish that rate. So you may want to ask, so where's the innovation in that? So 2 innovations. One is, yes, so in terms of this overnight reference rate, calculation methodology is completely new. It's API-based and it's granular transaction-based, which allows us to look at it very differently in future. So because we are now collecting quite a vast amount of data, it gives us an opportunity to start applying again the analytics capabilities that central banks are so keen to play with around, whether it's machine learning to look at plausibility, whether we want to look at advanced analytics technique for looking at trend analysis and building up some data around that. That is where we see the benefit of the technology going forward. So maybe that picture is depicting exactly that, is to say, where can we do an overlay of market innovations, technology innovations, into our current processes? And this process, we would say, we would transition to that in the next year or 2. So if you have to ask, why is it innovative? I mean, like our governor always says, central bankers are boring because boring is good for the economy. So you need to decide, if we had a good boring presentation, then I think we've done our jobs. But the innovation part is because the rate itself is innovative. It's moving away from a rate that's susceptible to manipulation. It's not underpinned by large volumes of transactions. it's moving towards a true transaction and volume-based rate, which is very robust. It's reliable, and it conforms to what we call international best practices. What does it give us? That adds into our contribution to financial stability. It also opened up the new rate, and its rate behavior impacts across, it's going to impact across all the markets, and it will provide opportunity for new products and conventions. If I look at the business model side of it, right now the business model is where the JSE and the Straight would publish, the JSE would calculate the JIBAR rate, Straight would publish the secondary market activity, and the SARB played an oversight role. Within this new business process, the SARB collects granular data. We are the custodian of data. The benchmark determination process sits with us. So we do the plausibility calculation and publication of it. Why is that a good thing? It means that the SARB is probably best placed to do that as the regulator and for public good. What we do is, because of how the rate's calculated, how it's published, it's not susceptible to any manipulation, and it's more robust rate. So I think most importantly is our role is also to make sure that we do contribute to financial stability. And having a credible reference rate based on business international best practices definitely contributes to that, and that is our function. On the analytics innovation side, I think it goes two ways. One is there's great opportunity, for the large data sets that we develop, that we can now start applying the different analytical techniques to it, the analysis that we want to do, maybe forward projections. It also provides for transparency, because this information is also publishable. And one of the things that regulators and central banks are looking at is to say, if we are the custodians of large data sets, and it sits in our domain, which of those data sets can be put in a public domain for the public good? So that, again, from a data point of view, it provides that opportunity. And then maybe from a boring perspective as a central banking, when it comes to innovation and data collection, it helps us with a certain level of standardization of data in the market. Data standardization, starting to look at data sharing, whether we're using standard data practices, whether we use standard data conventions and taxonomies. That in itself starts helping with the cost and burden of regulation. I know the biggest criticism that the central bank always gets is that you guys cost us a lot of money because in terms of the reporting we need to do. So it's quite important that as we go on this journey of, again, asking for more data from the banking industry and the financial industry, it comes with a cost. So what we are considering is to say, what are the things that we need to put in place to make it cost effective? So and that's through standardization, and then also the benefit of potential data sharing going forward. So maybe I'll jump into, Zakele, to help us out. Let's go into understanding the behavior of the Zeronia that we've been publishing over the last 2 months. Thanks.
Sure. Let me just put this here. Good afternoon, everyone. I hope you've been enjoying the conference thus far. So maybe before I jump into this slide, I just want to make sure that we are all on the same page and maybe explain what Zeronia actually is, unless some of you don't know. Ruan has already mentioned that it's an overnight rate, but I suppose in addition to that, it tries to reflect the interest rate at which banks basically raise funding in the overnight market, and we basically take unsecured transactions, looking at call and also bilaterally negotiated deposits, and having collected that data set, we would rank it, aggregate all the transactions occurring at a particular deal rate, and then remove maybe, well, not maybe, but we do remove the top 10 and bottom 10%, and so we then calculate a volume-weighted mean based on the central 80%. And so you'll see I'll be talking to a central 50%, and the normal Zaronia, it's calculated using the central 80% transactions. The important thing to understand, I suppose, is that the rate that is published today would be reflecting the transactions that were concluded the previous day. So in a way, it is backward-looking, but it's actually based on actual transactions. The difference that this rate then has in relation to JIBAR is a forward-looking term rate, and you would all know you can find the standard tenor as 1 month to 12 months. But basically, it is an indicative rate for banks, having estimated all the stuff the previous increments were talking about, but also the term would then say, okay, on that specific day, on a particular maturity, we'll pay you this much as interest. And so almost immediately, you realize that when we do discontinue publishing JIBAR, the SARB is the administrator for JIBAR, and so in a way, we've got the powers to say it continues or it gets discontinued. And then already, Rowan explained that given the weaknesses in the design of JIBAR, we don't see it continuing it for very long, and so we've indicated that it will be discontinued in the near future. But when that happens, all these loans and securities that reference JIBAR would have to find a new alternative reference rate. So Zaronia is now the preferred alternative that should replace JIBAR. So using the data that we've collected from the different institutions, there's about 10 reporting institutions. We call them reporting institutions. These are the banks that supply us the data. You'll see in the blue line the rate that was calculated, and we took this right up until the last MPC announcement on the 75% rate hike. But before we had gotten these numbers, we published a feedback document to a technical specification paper which described Zaronia in detail. And then I suppose, Artemis, if the members want, we can resend that document so they can get acquainted with how Zaronia is actually specified. We collected some sample data from the top, the largest 4 banks, and we computed what Zaronia would have looked like over a period of 5 years. And the concern that, having done that exercise, is that Zaronia tended to be quite volatile, which, of course, for an overnight rate that you're going to be using to price derivatives and all sorts of things, was a bit unattractive. But also, when we started publishing it on the web page as well, the first few days, or weeks rather, we started around about the 1st of August, publishing it in beta mode. They also exhibited quite a bit of volatility. And so market participants, and by that I mean asset managers, we haven't as yet had an industry forum for corporate treasurers, but I'm sure that is going to be coming up sometime early next year, or the first half of next year. We will go into the details of these things. But their concern was that it's too volatile, and we require a more stable rate that will allow for planning and forecasting and all those good things that you do with interest rates. And so now that we've implemented the validation process that Ruwan was talking about, it's like 3 layers of validation, so it's quite comprehensive. What's coming out is that the volatility that we saw before has been eliminated, or at least it's declined quite considerably. So we, in a way, that was Christmas coming early for us as the future administrator of this rate. And so you can see that within the blue line, the performance of the rate, which is below the repo rate, the policy rate of the SARB, by about 10 basis points or so on average, which is actually very good vis-a-vis the 45 basis that we saw when we did the trial last year. But also the important point here is that if you look at the amber line, now this one takes the central 50%, so it would remove more of the outliers that you'd find in the data set. It gets even more stable. So you can see it's slightly more flat, and some of these kinks that you see on other days in a way are removed. But what's important, I suppose, is that this rate is actually responsive to changes in policy rate. Ruwan alluded to the transmission mechanism for monetary policy, and this is why we're going to be watching this rate quite closely. Is that when the SARB made that announcement of a 75 basis hike sometime in September, the rate also shot up. Now the pass-through to the rate is not, the evidence is now, is not exactly 100%, but it did shoot up by about 61 or 65 basis points, you know, as a SARB had increased by the policy rate by 75 basis points. What this means is that if we start using this rate, especially if you're linking your loan or whatever structure that you formed to an overnight, it is likely to reflect market conditions as and when they occur. Now, in terms of the actual transactions that support the rate, on average, about 480 billion between these 10 banks that give us this data. And I'm just looking at this in case the blue part of the chart. Now, for us, we were quite happy with that because if you've got about 480 billion on average, it means that you've got quite a good stock, or at least the market is deep enough. You'd recall part of the weakness of JIBAR is that especially for the three months tenor, you had dwindling market activity. And yet, when you guys price your syndicated loans or you're pricing whatever hedges and so on, you actually make use of the 3-month JIBAR. So that was partly the weakness with it. Whereas this one, the volume seems to be stable. Yes, there is the seasonality which is expected actually from a banking perspective. It's weekly seasonality and also monthly that you're seeing here. But on average, we're happy with the levels. There's another rate that we are publishing together with Zaronia, which is, we call it Zaribo. And Zaronia is akin to Sonia and ACTSA, if you are aware of the global reference rate reform agenda. And Zaribo is akin to SOFR, the US rate that's replacing the US dollar LIBOR tenors. So if we're looking at the Zaribo one, we were also quite concerned that if there's too much volatility, it means that the transmission mechanism of monetary policy is not so very clear. But obviously, having put all these validations and processes in place, we were happy to see that this volatility is actually coming down. Of course, Zaribo is important for us as a central bank because our first port of call when it comes to intervention in the market is through the interbank market. That's how we affect liquidity conditions and things like that. And so this benchmark, Zaribo, carries quite a bit of information. But it's also quite important that Zaribo should be closely related to Zaronia because then if this go off kilter, it also means that we might need to look at how else or which other market segments we would need to get involved in order to affect interest rates. We suppose compare then Zaronia and Zaribo, and we're looking at on the right-hand side, or my right-hand side, facing you, your left, Zaronia taking the 80% central tendency, we're happy with the volatility, but we just wanted to show on the right-hand side that it does improve when we take the central 50% for both benchmarks. And the reason I keep on mentioning 80-50% central tendency, this is the one thing that might possibly change in the methodology that we use to calculate the benchmarks. And the structure called the Market Practitioners Group which is a joint venture between ourselves, the FSCA, and representatives of different market segments, and this association actually also has a representation at that level. I think Jacques Moll, Artemis, if I'm not mistaken, sits at the MPG, and then you are also represented in the other structures of the work streams, and Artemis sits in the communications. But I know that the corporate treasurer from Mercedes, she sits in one of the reference rates. Risk-free or unsecured, unsecured reference rate work stream. But that structure will review this thing in the next 4 months or so and make a decision whether we need to tweak this formula from using 80% to using 50% central distribution of rates in order to determine the benchmark itself. I don't know, Ruwan, if you wanted to continue from here.
I guess we just want to talk about impact. Thanks. Thanks, okay. So maybe just to wrap up, the last thing I wanted to leave you with is around, so what is the impact? So Zakeli has gone through the mechanics of how this works. We've touched a bit about how the process works, how the contributions of your work, the calculations and the opportunities that comes with it, having that level of data. The quick answer is, so why does it matter? So Zakeli sort of explained what's happening to the rates. JIBAR will cease to exist in some point. The sooner the better, I guess. It will be replaced by this rate. So prepare for the change. Zeronia is obviously different in terms of the calculation and its behavior, although it matches the right behavior. I did speak about infrastructure. So infrastructure is what is the impact of a new rate in terms of technology, people, and processes. Something to consider within your own environment is to, if you had to move your books across to those rates, what are the impacts? My assumption would be, as anyone from the technology space, the calculation methodologies, how it handles the rate should be quite universal. Because we have been with IBORs for quite some time. The transition of the UK market and the US market is some time ago, and you would think that most of your software vendors would have followed suit in terms of having the calculation methodologies. And they're definitely just readiness from a treasury function to use overnight rates instead, and not a term rate. Maybe I'll leave you there. I think it's got repercussions. There's still a way to go. Over the next year, we will be observing the rate, and there's obviously work around calculation of the development of term rates and the like, so it's still quite an exciting space. And it does provide for still more opportunity in terms of innovation in the rate space, whether it's on the collection rates, the calculation, and in the dissemination and use of the data. So thank you very much, and open for any questions.
Questions for the Reserve Bank? I have a question in the front. 2 questions, please, maximum. Our virtual panel is already on standby. Sir, please go ahead.
Thank you. You show the Zaronia rate being unstable, seems to be contrary to what you expected. Is that an indication that the JIBAR was not reflective of what was actually happening in the market, or are you reading it differently?
Okay, sure.
Did we hear that question?
Yeah, I heard the question. Yeah, so we were concerned that Zaronia would be so unstable that it makes it impossible for market participants to use it realistically. But then the question would be, all financial assets, or in the South African context, we tend to be more volatile compared to our international counterparts. Now, we needed to determine how much volatility or instability to the rate, would be reasonable. And also we anticipated that once we start publishing the rate, when you guys negotiate with the different banks in terms of your loans and other products that you're taking, you would make reference to the rate, which would bring stability also to the rate. However, the data that's coming in now is showing the rate to be fairly stable in a way that is desirable. And so all that we can expect going forward is even more stability in future. The important thing, I suppose, the slides that Rowan skipped, we estimated, looking just at bank balance sheet, about 27 trillion worth of contracts currently referencing JIBOR, obviously the majority being derivatives, and that becomes an important thing as you think about what is the implication for your own books, because those contracts will need to be renegotiated, if not actively transitioned into a new rate. That is fine.
Interesting. I think it's Zakele's soothing voice that's got everyone in a lull, because we always want to have the Saab in the room, but now we're all sitting there like, Zakele and Rowan, thank you very much for that lovely presentation. A round of applause for Zakele and Rowan, briefing us on Zoronia and Zaribo and Sophia and Sophonia and Esther. And, thank goodness that's not my problem anymore. Right, ladies and gentlemen, we've come to the last item on our agenda. You have done so well for still being here today. Actually, a round of applause for you for still being here. It's been a long day. It's been information overload, but we're still hanging in there, right? And now we're going to go over to our virtual panel, headed up by editor of the Treasury Management International, TMI UK, Eleanor. Are you there? Can you hear me?
Yeah, I can hear you loud and clear. Hopefully you can hear me.
We can hear you and we can see you and your lovely panelists who I will, if you don't mind, you'll introduce them, or would you like me to introduce them?
I will introduce them. All good. You've no doubt had a super busy day already, so I will let you go and rest for a minute and I will take over for a bit.
Thank you very much, because I chose shoes that are fashion first and not emceeing all day first. So bye, over to you, Eleanor.
Excellent stuff. Thank you so much. Well, welcome everyone to this session on cutting edge treasury today and tomorrow. We're absolutely delighted to be joining you virtually for this session. And I wanted to say a big thank you up front to Artemis and Charles for inviting us to be part of your event. I hope you've all enjoyed the conference so far and that you're prepared now for a bit of gazing into the future of Treasury and the art of the possible. And to help us navigate through the hype, we have two experts here who I'm sure you've probably gathered by now who they are, but they are Andre Olivier, who is Group Treasury Manager at PayU, and also Patrick Kuntz, who is Managing Director at Pecunia Treasury and Finance. And many of you are probably familiar with Andre, particularly in the South African market. Not necessarily so much Patrick, although he's a regular face in TMI magazine. But just in case you don't know them, I'll ask them to briefly introduce themselves. So Andre, coming to you first.
Thanks, Eleanor, and thanks a lot to ACTSA for inviting me. Always good to be part of these sessions, and big shout out to everyone in South Africa, especially those who recognize the face and maybe less the accent, but always good to be here. Certainly not the absolute expert on any of the topics that we're going to cover today, but I've been in Treasury basically all my professional life, 15 years plus, and worked in the UK, in the US, across Africa, now in the UAE as well, based in Dubai. Treasury running through my veins, so looking forward to sharing on this topic today.
Great stuff. Thank you, Andre. And Patrick, over to you.
Thanks, Eleanor, and we really like the energy coming from the audience there. So looking forward to that. So my name is Patrick. Same story as Andre. Yeah, it's treasury all my life. That's all I can do, and that's what I enjoy most. Yeah, and in my normal life, I'm treasury consultant, interim treasurer. Netherlands-based, but also Europe-based, given the multinational companies I'm working for. Done quite a few sessions with Eleanor. Always a pleasure to work together. So yeah, looking forward to having a chat with you guys and sharing my knowledge. Thanks.
Brilliant stuff. Thank you, Patrick, so much. So we're going to be touching today on three main topics. We're going to be looking at e-commerce and treasury evolution. And then we'll look at payment innovations, including crypto. And then we'll look at the future of connectivity with a focus on APIs. It's very much an interactive session. As much as we're not there with you in the room, please do ask questions of the panelists, put them to work, do your worst, and I'll leave some time towards the end of the session for those questions. But for now, let's get stuck into the proper discussion and kick off with that e-commerce topic. So, Andre, I know this is kind of something that's close to your heart. And obviously, throughout the pandemic, we've seen a huge growth in e-commerce, not just driven by me personally, but quite a bit coming from my house. But it's been in B2C segments and it's been in B2B segments as well. So tell us a little bit about how that's impacting your work, your mission at PayU as a whole, but also your role within the treasury function. What's changing?
Yeah, sure. So just a bit of background on the company. So PayU is a payment services provider. We provide effectively the payment infrastructure for e-commerce platforms. So if you buy something online, we facilitate the checkout page and essentially the transactional services between all the various banks and parties to a transaction. I'm sure some of the folks in the audience would see kind of that PayU logo or a checkout page come up when they're buying stuff, maybe on Take-A-Lot or some of the other platforms. But yeah, I think COVID was one of those events in history that really changed the landscape from e-commerce perspective fundamentally, and I think forever so, and really achieved something that's super difficult to do, and that's changing consumer behavior. As you mentioned, your own personal shopping experience, but I think everyone would have had roughly the same, especially in hard lockdown situations, with a proviso that delivery is still possible, but people spend a lot more time online than they did otherwise. And so that move from offline to online was significant and very dramatic. For us, we did a great publication earlier this year, late last year, on exactly how that looked in the South African market. And just to give the folks a little bit of context, South Africa is roughly 56% in its internet penetration, around 22 million shoppers, of which 37% of that, roughly, and that was 2021, is e-commerce. And so we saw a significant increase 2019 to 2020 and into 21, and we're seeing a lot of that continuing. But in a lot of segments, I would say, broadly speaking, the average was about 60 to 75% increase in traffic, both in transactional spending volumes, but also value. Some specific segments were higher than others, but the effect, I think, is pronounced. It's interesting, though, how consumer behavior changes, and you see some of those patterns, not necessarily backsliding, but people still do like to have physical interaction, right? So, the e-commerce businesses or even the online businesses that haven't been able to adapt are actually seeing some of the business coming back. But I think by and large, that's changing. I think the most profound impact on treasury, at least from our perspective, is in a fintech organization, treasury is typically a bit more front end than fully back end. But across both operational and strategic expectations, I think of treasury was certainly far more pronounced. And the focus around systems, processes, procedures, and the automation of them, I think, was the most important thing, because you couldn't just rely on manual processes anymore. but also the nature and timeliness of data to make decisions and rapidly so in certain situations. You know, the typical thing of your treasurer asking or your CFO asking you, you know, where's the cash is not like, oh, give me, you know, a day or so to put that together. You know, those days certainly need to be gone for the right reasons.
Yeah, you don't have the luxury of time anymore. Everything is very much real time. The cash is coming in real time. The data is coming in real time. But some really interesting stats there, Andre. And yeah, fantastic growth in e-commerce in South Africa specifically. Patrick, let's bring you in here because I know you've got some experience around e-commerce and how that's been growing as well. So does what Andre was saying there echo your own experience in terms of treasury evolution on the back of this trend?
Yes, definitely. I cannot specifically say it for the South African market, but I'm quite active in the European global market. Of course, the answer is it slightly depends on the company. I have some clients which are fully e-commerce, only online, selling 100% there. And there, the treasury function is a core business, and not like it used to be 10, 15 years ago, where treasury is at the end of a process. It collects the money. There are some nerds sitting in a treasury department who are good with numbers, and they talk to the banks, and they do their stuff, and they make sure the balance sheet is all right. Now it's usually the other way around. For example, I'm active at Booking.com. There I see treasury is really involved on the procurement side, on the business side, and even on the vendors. And also talking to the PSPs on not only how can we collect the money, that's the easy bit. How can we make sure all the clients in every country can use their local payment methods and pay as easy as possible, but also more on the product development side.
Let's give the technical team a chance to get Eleanor back. They're coming back. This is not your excuse to leave. They're coming back. I'd like to take this opportunity to ask you, please, those feedback forms, if you haven't completed them, please do so now. The sound of the turning papers lets me know you'd forgotten all about them. And you can just leave them at your desk, completely anonymous, of course. You can complete those forms in the meantime while we try to get Eleanor and team back. Is there anyone that needs a form and doesn't have? Everyone has? Quite unfortunate. Okay. We're just trying to plug in the router. We won't be long. We're back. Okay.
Hopefully. There we are. There we are. We were just discussing the irony of losing you when we were talking about next generation treasury technology.
Crashed the system there, Eleanor.
Oh, it's because there was too much good content coming through. That's what it was.
Thank you so much. Over to you.
Thank you. So I will hand back to Patrick because I think you were just saying some interesting things there, Patrick, when we lost everyone about the kind of embedded finance piece with wallets, etc. And then you gave some advice about Treasury sort of no longer being in the ivory tower. And if you wouldn't mind just picking up on that again, that would be fabulous.
Yes, no, definitely. So Treasury being the enabler of the business, not only being at the end of the process, collecting the money, but also talking to the business. What do you need from Treasury? What do you need payment-wise? But also being the expert to the business, as the business not always knows what are the possibilities here. Should we talk to a PSP and accept all the payments methods? That's the easy bit. But for example, for another client, we're talking on the payout side. How about we enable virtual credit cards as a payout method? Where the vendor, the client can get the money quicker in a more convenient way instead of a bank transfer, which sometimes fails and doesn't even fail on our side, but might fail on the receiving end because it's an exotic country or the bank is much stricter, while a wallet or virtual credit card could offer possibilities there. And it's not adding value for us, but it's adding value to the whole chain by making it easier for a vendor to receive their money and their payouts. So it's really Treasury going out to the business and finding this collaboration between each other. And I think that's where the win-win is.
Excellent stuff. And like you say, you've alluded to some of that kind of embedded finance piece, which is growing, and banks are doing a lot there, banking as a service. There's a lot more services that companies are now being able to offer to their end clients. Andre, any additional thoughts on that embedded finance piece and the growing remit of a treasury function? And how can teams prepare for embedded treasury rather than just embedded finance?
Yeah, I love the concept of embedded treasury because I think it's so relevant to each and every one of us in our daily lives. I mean, we do it all the time, right? When you're making a payment, when you're online banking, you're doing payments. When you're managing your loan repayments, you're doing a bit of debt and facilities management, right? And when you're traveling abroad and you're buying your forex, you're doing a bit of FX. And the banks have latched onto that, and you'll see how they start to develop online banking platforms, both on the corporate side, but even personal banking. And you see it even more so on the neobanking side. The new age banks that come out that are fully digital, the way that they position products are actually with the treasury mindset in the back end. And that's also how we even think about our own product creation is we effectively are creating treasury products and services for our merchants, whether it's payouts, working capital management, risk management. And so that concept of embedded treasury and the broader aspect of embedded finance, I think is something that is coming to the fore very prevalently. And I think is the most notable applications of them are the applications themselves. And there's a little bit of a pun there, but ultimately the software that we use on the hardware, especially mobile devices, is changing how we're doing things all the time. For me, I think that the magic that it brings applications in both sense is really around the data, and therefore what we do with the data and how we set ourselves up to use that data most effectively is really the key. So in short, I think from a treasury perspective, you really need to have an IT or a system strategy and also data strategy, because if you're trying to automate and you've done automation, fantastic, but that actually means you're sitting on hotbed of really good data, possibly, and how you use that ultimately to benefit your own function, but the broader organization, I think is where you unlock the real potential.
The real value, yeah, absolutely. And there's data that the banks hold as well that we can make more use of, and embedded finance piece will be important there. And I think, as you say, Andre, it's going to be a really interesting theme for 2023. So one to watch and one to look out for and maybe do a little bit of research on. But we've got a lot else coming down the pipeline at us. So payments innovations and crypto is our next topic. And there's a huge amount going on here, Patrick. We've got new payment rails, we've got standards that are changing, we've got ISO 20022 going live in November, instant payments, it goes on. What do treasurers actually need to know and care about here? And are these developments really as important as they're sometimes made out to be?
Yeah, there's a lot of going on. That's right, and it's a struggle for treasurers to follow up on all of it, and to decide for themselves, is this relevant for me? For some companies, instant payments are great. For them, it's really important to get their money quicker in and use that data. For other companies, they don't care too much. They're like, as long as I get my money, I'm okay with it.
Yeah.
So it slightly depends on the business. I do like the fact that, and I cannot stress it more, we do need standardization worldwide, because otherwise you still get a European scheme, Asian scheme, US, all these different schemes. Even within the EU, we still used to have SEPA, ABEX, the different ways of connecting, even the SEPAs, the XMLs in Europe, it differs from country to country, bank to bank, because the requirements are different. So ISO standard, yes, fully supported, but I'm wondering and I'm doubting and I'm negative that not all banks are going to use the same standard, and somebody needs to push, okay, this is the one, let's use this one and use it in the same way. Please not interpret it in different ways. Same with the CBDCs and the instant payments. We have to work together for cross-border payments, and not have 5 different schemes at the same time, which is going to increase the workload for treasurers because they have to understand them all. It's going to be great for consultants, of course, helping the treasurers, but then it's not helping the standardization case, of course.
No.
You should be moving to one standard, and let's hope it's going to pick up on that, and it's not going to take years, and we can do
fingers
it fast.
crossed. But it's definitely a concern, Andre. I know we spoke when we were preparing for the panel about the amount of friction that there still is in cross-border payments. Are you hopeful that things might change with ISO, or again, are you a bit on the fence with Patrick?
Well, yeah, I'm rather a believer in the new technology, which I know is kind of a leading on question to the next one. But look, I think cross-border payments are really still kind of, I'd say, the holy grail around payments. I think domestic payments are being solved slowly but surely, but instant payments are far higher adoption broadly than cross-border. And the reason for that is specifically, as you mentioned, the friction aspect. And I think, you can see that in the strategies of banks, how they position new solutions around those topics, how much they've invested in that.
Yeah.
And I even know about some of the stuff that they're looking at behind the scenes as well. And that speaks again to the next topic. But I think the proliferation of remittance companies is another key indicator. But really most tangibly, I think for corporates and for treasurers is the fact that we all know that it takes way too long, costs way too much money, and there isn't enough transparency around international payments, right? Who's with me? I think everyone will put up their hands when we ask that question. But now all of these initiatives that we're talking about now are just built on old legacy rails. And so even if you think about Swift GPI, which I think is a great initiative, and I think that will for sure make a difference. And I do know Swift is trying to be really innovative around, let's say, the concept of legacy rails and trying to a certain extent reinvent themselves. But in my view, we really need to look at the new rails to solve that problem most fundamentally.
So let's talk a little bit more about those. Obviously, it's the blockchain world, it's crypto, it's digital currencies, it's CBDCs. So Patrick, what are your experiences here? Do you feel it's just a kind of marketing gimmick at the moment, or is crypto just being hastily converted into fiat money behind the scenes, or do treasurers need to be thinking about crypto wallets and custody and all the rest?
Yes, I hope they are thinking about it, and I hope if they are thinking about it, they are thinking about it in a sense that it's a means of payment, not necessarily as a store of value or investment class. So not looking at the volatility of the rate or the height of the Bitcoin rate, and I think some treasurers are really like, no, I don't believe in it. I'm not sure if it's a matter of believing, but the trend is picking up, and I think depending on the company you're in and the customers which are asking, as a treasurer, you need to be prepared, and then you cannot ignore it anymore. Might be different in more developed countries where we have the infrastructure is okay, fiat money is strong. But crypto is also an opportunity for developing countries to skip all this infrastructure which they don't have in place. They don't need to set up the infrastructure and move to crypto online blockchain solutions and use that one as a means of payment. And if there's a big client base there and your clients demand it, hey, I have monies in my crypto, I don't want to convert it to fiat and then pay you, I want to pay you directly to crypto, then treasurers cannot ignore it anymore. And of course, then it's up to the treasurer to decide, yes, we accept crypto, what to do with it. In my opinion, it's very easy. Crypto, BTC, ETH, it's just a new currency pair and a hedge decision to make from a risk management perspective. Do I keep it for future use, or do I pay it out, or do I hedge it immediately? The only question is it's more difficult to get in my TMS. I need a separate wallet, and my bank is probably unwilling or asking me extra KYC questions. But the trend is you cannot ignore it anymore. For some, the pressure is more on than for others. So definitely educate yourself.
Yeah, absolutely. And we spoke about the irony of the KYC, because you actually probably know more about the crypto person than you would with the cash just coming in. But Andre, anyway, your thoughts on crypto and where we're at and what the audience might need to be thinking about.
Yeah, so I think this question is very timely from a South African perspective, with the South African Reserve Bank coming out this weekend officially designating or recognizing it as an asset class. So I think that paves the way for the regulations to follow suit. Of course, regulations come with pros and cons, and I think there's adoption and adaptation that still needs to happen within the market. But these are all positive signs, because I think, as Patrick said, it's no longer a fad, right? It is a reality, and its applications, I think, are super relevant, but use cases vary based on industry and its intended purpose. But we also see the value for sure as a payment method rather than a store of value. Of course, we, as a payment service provider, you've got two sides of your opportunity, both in terms of platforms that provide the services, but also enabling payment methods. And that's really where we've invested from a crypto perspective into those industries that reduce this friction that we spoke about before. And we've had a lot of success in the partnerships that we've explored, and even some internal use cases that we've explored. So we know it can work for sure. It's been proven. But I think that mass adoption and the point where it becomes really relevant from a treasury perspective, I think is still some way off. But that doesn't discount, I think, the fact that we all need to think about it, and think about it in a very real sense from an application perspective, again, both, and I think specifically around policies and the intended purpose of using it or holding it or having on your books, and how you dispose of it, educating yourselves around those things. But here, I think fundamentally it comes down to the risk appetite of the organization and the governance levels that the board sets around what is permitted and isn't. I think there's a role for Treasury to play as being advocates if you're passionate about it and you see the value, of course. But I think there's a real opportunity for Treasury to play a leading role here, actually revolutionizing the way that we solve this embedded finance, embedded Treasury story and actually digitize it, especially from a cross-border perspective.
Yeah, with these much more modern technologies. Okay, and any pitfalls to avoid, given the kind of work that you've both done around crypto? I know, Patrick, you mentioned to me once before about maybe there would be some issues with refunding if you'd accepted crypto and the value, etc. there. So just any advice you could give the audience?
Yeah, that's it. Usually Treasury has a treasury policy in place for the normal currencies and how to deal with cash, but it's nothing mentioned about crypto. And what I just said, I made it sound very easy. Yeah? It's just another currency, and you can sell or buy it in the spot market, and then you're done with it. But of course, it's more complex. For example, at booking, if a client books and pays in Bitcoin, I can immediately sell the Bitcoin. But if they then have a booking which is refundable, and then 1 week later he decides, okay, I'm going to cancel my booking, please give me my money back, so I need my Bitcoins back. If then Bitcoin moved 10%, 20%, we're losing money there. Normally, we for euro, dollar, GBPs, whatever, we would hedge it in a forward market. There is some forward market in Bitcoins, Ethereum, but not for other currencies. So there are still some decisions to make. Okay, if I accept crypto, what do I accept? Do I accept all of them or only the big ones? How do I hedge it? What risk appetite do I have? And how do I manage it? Normally, you have an extra bank account, you add it to your TMS, you call up your bank. Now you call up your bank, hey, I want to accept crypto. They get nervous, like, why are you doing this? Is it to confirm your regulation? And I can't support you here. So you go to the internet, you find a trustworthy wallet or PSP who can help you out there. But it's again, it's going to be standalone there. So it's not fully integrated in your TMS and in your reporting. So there are quite some extra decisions and policy compliance, KYC, maybe tax, because if somebody with crypto is paying you from Fiji or Bermudas, that might be different if they are coming from Germany. All those aspects need to be considered, and it's usually the go-to route for the business would be, hey, treasurer, you deal with the money, you deal with this. So you probably need some consulting advice from experts. Usually the wallet providers can help you out there. But it's not an easy decision to make. Think it through first.
Yeah, there's an awful lot to consider. Andre, anything you'd add to that?
Just adding on, because I think those are all super relevant points, but it fundamentally, I think, comes down to risk management and governance. I think you've got to start there and map out the changes in how it would affect your business and Treasury specifically, and just go through the individual checkbox exercises. And really, at the end of the day, what I'm also having discussions with Treasury management system providers, as well as how do we recognize this now in our system. So we've just gotten to this point as treasurers that we're really happy with TMS providers kind of doing Treasury 101, and now you're trying to add on crypto, and you start unsettling the boats a little bit. But I think the very relevant one that Patrick mentioned was around KYC and compliance from a banking perspective. So it all depends on what you do and the function of crypto in your universe is, but making sure that from a compliance perspective, you're doing everything that you should be, and that's where kind of that knowledge within your own company around compliance aspects and governance and regulations becomes important, because this is a new asset class, right? Most people aren't well educated. The talent and resources that are knowledgeable around it are few and far between. And so make sure that you kind of check all those good boxes before you
Okay, great stuff. We'll talk in a minute about APIs. I'm just going to do a quick straw poll in the audience because I'm interested to know, is anyone using crypto? Just put your hand up within your organization. So from a corporate point of view, can anyone put their, I'm not going to ask you anything. It's just to see if there is anyone. I can't see any hands in the room. Is there any? No. Okay, interesting. And is anyone sort of dabbling in crypto from a personal perspective? Again, I won't ask you anything, just checking to see. Are there any hands up? Can't see any.
Yeah, there
Oh,
are
there's
few.
one, two. Okay, there's a couple. All right, interesting. We'll have to see how that moves on to next year's conference. We did recently at TMI, we did a survey among European corporate treasurers. So there were about 250 who answered, and 2% were currently accepting crypto payments, but 10% looking at it for the coming 12 months. So I think it will definitely increase. But let's.
Sorry, Eleanor, I see some folks in the audience that I recognize and I know should be putting their hands up.
No,
But as corporates and individuals, I'll be contacting you after the conference.
Good stuff. Well, we'll open up for some questions very shortly. We're just going to have a really quick chat about APIs. So get your questions ready. So APIs is a huge topic and we can't really get away from it in Treasury at the moment, particularly as we move towards this more real-time environment. So Andre, to what extent are you actually leveraging APIs to receive instant information or even for other uses like payment initiation?
Yeah, I think this is one of those aspects of really of embedded finance that is transformational. It's really something that came from the banks and is making its way, becoming far more prevalent in many aspects of communication. And I think in the Treasury world, that bank communication and bank connectivity and how we exchange messages with banks, whether it's around payment initiation or information coming back into our systems, is really where it's powerful, and the speed at which you can do that. So for me personally, we're going through a treasury management system implementation, and you can see the difference in connectivity timelines for implementing with certain banks where you're doing through APIs versus traditional Swift or host-to-host. So those lead times are significantly reduced, as well as integration with other systems like your ERP system, for example. Also reduced significantly, and oftentimes you actually get far richer data as well. So yeah, I think for me the real magic to it at this stage is really around your systems capabilities and being able to leverage that capability to speed up and reduce maintenance time on implementations. And also richness of data, but it does come with a little bit of a caveat. For us, it's fairly easy because we use APIs all over the business, particularly with, for example, integrations with merchants like Booking.com. So our IT infrastructure is very well set up for that. But if your IT department is not, then it would be a challenge. So you always need to kind of have that internal calibration as to what the capabilities are. You can, of course, now start to outsource a lot more of this to even TMS providers and the like. But I would say that IT capability around technology is a key dependency, but it's something that needs to be recognized before you can really take advantage of the full opportunity.
Yeah, that makes sense. And Patrick, you've also been looking into APIs. Tell us a little bit about your journey and maybe some of the stumbling blocks, kind of lack of standardization, etc.
Yeah, I can only happy what Andre said. It's really about the speed and the richness of information. So in terms, for example, with Booking, we were working with our main cash management bank, had to move away from MT942s in intraday balance confirmations for our cash pooling balances, which then can be pooled to our main cash pool and invested in money market funds. Because for some bank accounts, we have 10,000 of transactions during one day. It takes time to build the MT942. So we miss out on maybe even 30, 45, 1 hour of information So we don't take that money in the cash pool, which we should. So we're basically working with the bank on, hey, what if you use an API and you send us this information in a more structured way and in a quicker way? We save an hour. We get this extra funds of an hour into the cash pool, so I'm actually making a return there. And it's much better structured, and I get the information in a better and more trustworthy way. Okay, that's the theory. The practice. Okay, we've been working on this for 1.5 years because it's very difficult. Okay, we have smart people in-house. We're Booking.com. We have the IT. Same what Andre said. If you're a big company, you can build it, but you have to build it together with a big US cash management bank. You have to make it fit. So it's going to work for us and it's going to work out. But looking at the timeline, it's a long timeline. It's a big project. It costs a lot of resources. So yes, it's available for a multinational, but a smaller company without the resources and the knowledge, they wouldn't be able to do it. So they are then dependent on the APIs available in the market, which the banks offer, which the TMS offer. And then again, treasurer, go out there and find out which APIs there are. Try to Google it. It's very difficult to find. You have to talk to each of your banks you're dealing with. Do you have an API? Yes, we have. But how does it work? Is it going to fit into my ERP system? Is it going to fit into my TMS? And then there still needs some tweaking. So it's not so easy. The holy grail of APIs was, it's easy to connect A to B with a standard API, and everybody's going to use it. But it turns out differently. Every bank has their standard API, which they think is the holy grail. But we end up with 10 holy grails, and it's up to the treasurer to decide which one is the holy. And that makes it difficult again. Not wanting to sound negative, I do like the fact it's advancement, it's extra information, it's quicker information. It's just a bit bigger struggle to finding out how it works. So again, more education needed for treasurers, with the help from the PSPs and the TMSs.
Yeah, but also hopefully more work among the banks to get some standardization in place, fingers crossed. I'm going to stop here and ask if there's any questions from the audience, because I know we've been talking a lot and we're running over time slightly because we did drop you for a little while. Any questions from the audience? Can't see anything. No? Okay. I've got one more question then for you both. So we haven't spoken about AI, which is obviously being talked about a lot in the Treasury world. I've done a very interesting case study with Etihad, who've used AI to weed out duplicate supplier payments. And they've done some huge projects internally, and it's given them a lot of efficiencies within their Treasury department. But from your personal point of view, each of you, what role do you see AI playing in Treasury today and tomorrow? And will it be the big revolution that it's kind of being hyped to be? So Andre, to you first.
Yeah, I think it's one of those, it was definitely the biggest buzzword, AI, ML, those two always thrown together a couple of years ago. And like any technology, I think it's based on, again, the application of the use cases and where it finds the most value. I think from a Treasury perspective around forecasting, there's for sure a lot of value and application. Again, it comes back down to what I spoke about earlier around data. You need to have that consistency and data integrity for any of these technologies to be really useful and provide the powerful output that it can. But we're investing a lot into that kind of predictive analysis. We use it in our business around credit scoring as well, in our consumer lending business. And that's super powerful. Those are things and techniques that you can't do with traditional methods.
Yeah.
And I think that same application around forecasting is useful and very relevant. both of these conditions are predicated by data, and lots of data. The more data you have, the better your output is. So having that data strategy that I spoke about before is essential for you to even start to consider any of these kind of sophisticated technology leveraged tools that are available.
Yeah, that makes sense. Patrick, thoughts from you?
Oh, yes, definitely. I always like it if clients mention that. Hi, Patrick, how about AI? We want to look into this. And then I counter them. It's like, so it basically means your house is already in order. Everything is perfect in the way you have it. Because as Andre said, AI is basically technology which uses your existing data, which you already have. So it's the technology doesn't add anything. It's only going to show you the data which you already have, sliced and diced in a different way, and it's going to use it to predict the future, or to going to show you parts of the data which you didn't knew. So that only works if your data is sufficient. If your data is in order, so the data quality is very high. And yeah, so if my clients cannot answer, yes, my data quality is perfect, I vouch for it, I know I have all the data that I need to put on AI, doesn't matter if it's on forecasting, on predictive analysis, or on fraud detection, get your house in order first. Talk to your data interns or the data technologists internally. We do it a lot with booking. We use data a lot. And we only use it if we know that we can trust our data. Because otherwise the AI is going to spit out information, data, which you're going to question, like, is this correct? Or you might not question it and you take it for granted. And then you make wrongful decisions. So yes, you should look into it, but only at the end. Really at the end, if you're confident your house is in order, what can I do better? How can I make it even better?
Yeah.
And then AI comes into place, and it's not going to be a solution if your house is not in order.
No, a lot of homework to do first. Okay, great stuff. So let's just wrap up with a very quick comment, because I know you both like to talk. Very quick comment on your key takeaways in terms of preparing for Treasury today and Treasury tomorrow. So Andre, coming to you first.
So look, I think I do think we're living in a very unique time. I think it's a point where Treasury is far more relevant. And I know there was probably articles written of this exact point 10 years ago, but I think that the relevance of Treasury in everyday life is an illustration of its relevance on a far larger scale. And the aspects that we briefly touched upon around embedded finance and embedded Treasury are more than just buzzwords. I would really encourage people to go and do a little bit of research around what does it actually mean, like for me as a person individually, but also from a Treasury and broader finance perspective. Of course, all the big houses will put out loads of articles and the interpretation of it, and it comes back down to the application in your individual organization. But there are opportunities for Treasury actually to be quite pioneering and forward-looking and value-adding in new ways that they weren't before. And it does take a collective effort. So within the fintech world, some of the treasurers like to get together and talk about these things and see how we can drive Treasury in a specific direction. And I think, Treasury fraternities like this one, and I think all over the world need to get together and sit around tables and say, how can we take the technology that's available to us to advance Treasury as a function? Because it is and has been in the past really kind of considered a back office function, and it's moved up a little bit. And I think unless we really kind of push that door open properly with our feet and jump in, we lose an opportunity. And other fintechs and other enablers will mimic the role that we should be playing as treasurers to re-advance the function.
Excellent stuff. Thank you, Andre. Patrick, your final thoughts?
Yes, I'll keep it short. I think the key is focus. You can take the treasury everywhere you want to, and I always have ideas about what an ideal treasury should look like. But I ask my clients, like, what's important for you? And then the answers that come then, if it's a company who's struggling with their cash position or financing, then the focus should be cash and cash management. Where's my cash? Where's it sitting? How much is trapped? Then we focus there. If it's a cash-rich company who says, "Oh, I really want to offer innovative products to my clients," then we look at fintech, extra solutions, pay in your own currency, facilitating the clients where treasury can really help out and add value, add meaning. And in some cases it's FX risk management, because the balance sheet shows P&L effects because the euro dollar is going everywhere. Then the focus should be there. So the key word, in my opinion, is often focus. Like hey treasury, where's your priorities? And focus on these priorities first. Get those in order, and then your treasury will improve automatically. And once you have those ones, then improve the others. And regularly keep talking to the business. Then you know what's important for the business. That should be important for you.
Yeah, because there's an awful lot coming down the line. There's a lot out there, but there are also some huge opportunities, as we've heard from both of our panelists today. So that brings us to the end of this session. Huge thank you to both of you, Andre and Patrick, for taking the time out to share your insights with us today. It's much appreciated because we know how busy you are. Thanks also to all of you in the audience for listening, and also a shout out to Aaron. Thank you for sorting out the technology for us. That's much appreciated. And I hope you enjoy the rest of your day. Thank you.
Thanks, everyone. Thank you. Cheers. Bye-bye.
Okay. Eleanor did a little bit of an exercise where she asked you to raise your hand if you dabble, or your organization dabble in crypto. I'd like you to raise your hand if you got the ESCOM SE push app notification about 10 minutes ago. Maybe that is why we're not dabbling in cryptos. We don't have electricity. But anyway, I just found it funny because the gentleman sitting next to me, as my phone went off, I saw your phone go off as well. And I thought that was quite funny. Ladies and gentlemen, we have come finally to the end of our program. We have gone around the world and back, looking at everything from technology to regulations to reforms, and how it impacts how you continue to get the best out of your corporate liquidity and funding requirements. It's been an absolute pleasure for me getting to know you, your organizations better, and the world that you operate in as corporate treasurers. But for now, I am signing off as your program director for the day, handing over to Artemis to do the thank you and official close of this year's conference.
Thank you very much, Samke, for taking us on this journey. And just a heartfelt thanks to all our members that support us. It's just very interesting to see that some of the corporates mentioned in today, some of the presentations, are members of ours and support us. I love the interaction that we have with the Reserve Bank. And thank you very much for accepting us and understanding that we do have a role to play with the treasurers when there any kind of surveys that we need to take out and surveys that we need to distribute. We're always there to help you. And in the interests of Treasury as a profession and in enhancing the Treasury profession in South Africa, which has always been something dearest to my heart. And please, we're on the ethics committee. We're also on the work stream and the reform rates. So we're pretty active in the market as an association. So on behalf of the association and our board, who are voluntary, and to Charles, who spearheaded and facilitated, and especially to Deborah, also in pink, who's my other half. Thank you very much for attending. We were hoping to get you out, but half an hour out, but we learned a lot. So thank you, and hope to see you again very soon.